All right, what is risk management? So, easy. It's 1% rule. That's it. Just don't risk more than 1% and you'll be fine. But let's get a little bit more technical than that. Let's think about compounding. The magic word, the potential, the dreams of many are ruined and destroyed by the power of compounding. Because people try to revenge trade. They lose money and they're like, oh my God, I need to try to make it all back. And then they risk 10 times as much. And then they lose that. And now they're down bad. No. Understand the power of risking 1% per trade or less. Because it's not about how much you can win. It's about how much you can lose. Because ultimately, on your journey to becoming profitable, you will lose. So I need you to see something very, very cool. This is a Monte Carlo simulator. Ignore the website. There's some ads, whatever. All right. So we're going to say that you start with a very normal amount of money, $1,000. Okay. Now, if you risk 1% per trade and you win only 55% of the time, you don't have any break-even trades. You either win or you lose, and you take an average of 2 trades a day. Okay? And you make an average of 2R. I will explain what 2R is in a second, but basically you can understand it as doubling your risk. So if you risk 1%, you're going to make 2%. But if you lose, you're only going to lose 1%. I hope that's not confusing, but I'll explain it a little bit better in 1 minute. Okay, so let's simulate these returns. Look at that. Over 4 years, if you have a 55% win rate and you take 2 trades a day, and on average you basically win one, lose one, starting with $1,000, your most likely scenario is in 4 years, you're going to have $27 million. Isn't that crazy? It's truly insane, honestly. Like, it's insane. And the worst case scenario is you have $3.3 million, starting with $1,000 over 4 years, just looking at 55% win rate at 2R. That's crazy. So how does it all work? What is risk management? So R is a multiple of your stop loss. So if you enter here on this trade to go long, and you have a stop loss down here, right? Your R is this number in the middle, 6.42 in this case. So we aim for 2. So you just need to catch this tiny little move, just 2R. But what if your stop loss was bigger? Now, if your stop loss was bigger, and let's say you entered on this candle, right? And you aim for 2R, that's also 2R. So this is, let's call it the only drawback of trading with dynamic risk or dynamic risk reward, is that your stop loss is going to tell you how big your position size should be. And so in turn, it doesn't matter that this first trade is only a 0.34% move and the second trade was a 0.98% move. You still make the same amount of profit if you are risking 1% per trade. It means if this trade went against you, you are losing 1% only. But if you win, you make 2%. So if we go back to our little Monte Carlo simulator here, even in the worst case scenario, right, where you only have a 50% win rate, basically, right? You have 10 losses in a row, worst case scenario. Oh my goodness. You start with $1,000. You still get $3.3 million. How? How is that possible? Compounding. The eighth wonder of the world, as Einstein called it, right? And so when we talk about revenge trading, what does that mean? It means you went long here. And let's say your stop loss was up there, right? And let's zoom in a lot right here, right? And what does that mean? Oh no, you lost this trade. You didn't make your 2R. Oh no, you almost hit your take profit. Look how close you were. But you didn't hit your take, you didn't win the trade. Okay. So then what do people do? So then people say, okay, fine, the market's going short. And so they enter this candle here, but they enter with 5% risk as opposed to 1%, and they lose again. They're not following their plan, right? But before we talk about plans, we have to talk about risk management, which is why we are talking about it right now, right? It's just about managing your risk in a normal way so that you can maximize your returns on the market by no matter if the move is 0.98% or if the move is 0.34%, like it was here. Either way, we are ensuring that you are maximizing your profits while making sure that your losses are as small as possible. This is the crux of risk management, and this is what the most important thing is, even more so than your trading strategy. Never risk more than 1%, and understand dynamic R.